price cycles. Now, when I say price cycles, I'm referring to the individual swings at different degrees of trend. These individual swings or cycles make up the overall larger patterns that we study. Now, we use different time frames to analyze the cycles. However, cycles are not time frame specific. They are categorized in degrees of trend, which we'll talk about a little bit later. We can use things like trend lines, trend channels, wave counts, or even Fibonacci retracements to determine if a particular cycle is ended or is continuing. And the studies can be a bit subjective when it comes to cycles, so we'll use different tools at different times. And remember, we're using these tools to try to determine if a cycle is ended. That's the whole idea of trading here. So hindsight is much easier to look at the price cycles and separate the price cycles. However, doing it in real time is when we're going to use the different tools to look to catch the next swing. Okay, so I hope that makes sense. So let's go ahead and look at a price chart here and just give you an example of when I say price cycles, exactly what it is that I'm referring to. Okay, so here we have a current chart of the Euro US dollar. This is actually a 60-minute chart, and you can see I have a divergence set up here right now that I'm actually watching, looking for a trade entry. But anyway, back to price cycles. Let's start, okay, actually I'm going to back up. All right, when we talk about price cycles, this is what we're referring to. Let me get, as soon as I find my drawing tool that I want here. Okay, here we go. This right here is a cycle. Okay, this is a rally cycle. Here is a corrective cycle. Here is another cycle. Here's a pullback cycle. Here's another cycle. So these are all examples of cycles. Now, the market is fractal in nature. Okay, the market's fractal, which means that each individual cycle is made up of smaller cycles, and these are the degrees of trend that we're referring to. These smaller degree price cycles make up the larger degree price cycle. Now, one of the easiest ways to determine if a cycle has ended is to use what we call our regression trend channel, and we'll cover this here in the tools as well. Once price trades well outside of this regression trend channel, combined with a Fibonacci retracement here, you can see now we've retraced between the 50 and 62% retracement zone of this particular cycle. It's easy to tell that this rally cycle is complete and we have entered into that corrective cycle. We can also use trend lines, or just the fact that this retraced, just the fact that we had a retracement here of 50 to 62% would give us a good idea that this cycle has completed. Okay, and then we have the wave counts that we're going to use, and we're going to teach you these a little bit later. In this case, this is an example of what we call a triple. Okay, I'm jumping ahead a little bit here, but just to give you a little bit of a preview, we would label this as a triple. So basically it will be something like this: a W, an X, a Y, an X, and this completed the triple here, which is actually a Z wave, but we wouldn't label that as a Z. Or we could label it as a Z, but we would put a larger degree letter up here for this particular move. Okay, so basically, in a nutshell, you see a three-wave cycle here, you see a three-wave cycle here, you see a three-wave cycle here. And I can already see some of the hardcore Elliott wave folks shaking their heads. But that's okay, because I believe by the end of this course, this is going to make a lot of sense to you, and most likely change the way you view price action. And we're not just going to show you in theory and on classroom charts. We're going to show you on a lot of charts, in a lot of situations here. Okay, so these are price cycles. and you'll get more familiar with these as we continue here through the course and start to look at some more examples.